Hey everyone, I did a video about 2 months ago on Amazon when their stock price was 1934. It was the top 5 reasons why not to buy Amazon stock. Got about 1,000 views and 31 likes, but I also got 8 dislikes, which I understand because there's a lot of people who own this stock and definitely don't want to hear any negative news. So I thought it would be funny to compare what my video was then to JP Morgan Chase against Amazon today. Amazon's price has gone back down to 15 to 1600, so they've gotten hit. You used to be able to buy the company for 943 billion, almost 1 trillion, and now you can buy the entire company for 770. I believe the number is 770. So if you had enough money, you could pay for every single share and buy the entire company and take over Jeff Bezos, is basically what that number stands for. People believe the company is worth 770 billion. I disagree. Not even 770, definitely not 943. So I wanted to compare it to JP Morgan Chase, which is a company that Warren Buffett just put $4 billion into at the current price, right around $100. I mean, a few dollars definitely matter, but over the last 5 years, JP Morgan, they're just an investment bank. They're like Goldman Sachs. They've gone from about the 60s range up to 120, back down to 100. Amazon has gone from 300 range over 5 years up to 2000 range, and then they've also come back down to 1500. So they're coming down. There's a dip right now, and which ones do we buy? Buy the dip. Well, Amazon's dipping. Should we buy it? No, you should still not buy this dip. This dip will probably come back up here, and then it'll go way down here because they are not worth what people are claiming they're worth. There's no way anyone in their right mind would pay almost $1 trillion to buy this company and expect to get a return on that investment. It is way too high. So let's look. Financials for Amazon. Balance sheet is annual. Financials for JP Morgan. Annual. Balance sheet. Let's see what these guys have. The balance sheet, for those of you who might not understand, is their assets and their liabilities. And right now their total assets, let's just be nice and simple, 2.5 trillion. It looks like billion, but there's 3 extra zeros in Yahoo Finance. Total liabilities, 2.2, but I'm not too concerned with that. Let's let them do the math for us. The net tangible assets, $181 billion. So the company of JP Morgan is worth exactly and at least $181 billion, because if they sold everything off, paid off their liabilities, and closed the doors for good, that's what they would be left with. Amazon's balance sheet, when you go down to the bottom, I won't even look, 10, almost 11 billion compared to 181. I didn't tell you yet what the market cap was of JP Morgan, I don't think. I hope not, because the suspense would be even better. Market cap is only 334. So let's say that you have $1 trillion. You win the lottery. You have $1 trillion. You have the choice of buying the entire company of JP Morgan right now, and you can buy them for 334 billion. And then you go over to their balance sheet, and you can see that they have 181. So you'll get half of your money back immediately. You would know that worst case scenario, you paid 334 and you can close the doors tomorrow without having to make any money tomorrow or the next day or the next year. You automatically have 181. So you would lose half your money. Let's see what they're making per year on the income statement. Right at the bottom, I don't want to talk about the top line revenue because there's so many things that come after that. So just simply comparing these two companies. 22 this year, 22 last year, 22 the year before, 20 the year before, 4 years in a row, 20, 40, 60, 80. So over the next 5 years, they're going to make 100 billion plus what they have on their balance sheet, 181. That goes up to 281, and then in 5 more years it goes to 381, which is more than the 334 it cost to buy this company. So in 10 years you would have more than the amount that you paid. 181 plus 100 plus 100 is 381 minus 334, you end up with a positive number. Amazon, you start with 10. We'll call it 11, of course. Cost you almost $1 trillion to buy it. So you had to use all of your $1 trillion to buy this company, and you end up with 11. So if something happens tomorrow to Amazon and you have to close the doors, you're only going to start with 11,000 when you close the doors, and then you have income per year 11. Well, 4 years ago it was minus, then it was 500 million. Again, there's 3 more zeros on everything in Yahoo Finance. Then there's 2.3 billion and then 3 billion, but it gets even better quarterly, it gets higher. If you dig in quarterly and you really want to look at the short term and then extrapolate it out over the long term, that's probably the worst thing you can ever do when you're looking at an income statement, but that's what they usually do with tech companies. 2.8, if you multiply that times 10 years, you end up with 28. So let's take 28 billion and let's even call it 30. Let's call it 50. Let's just bump it up to 50 because they're going to keep going up. 50 over 10 years plus another 50 over 10 years. You're looking at $100 billion in income. And it's a big number, but it's really not. $100 billion in 20 years. Plus the 11 that you started with, 111 in 20 years, which costs you, I already showed you, $943 billion, and today it costs $770 billion to buy the whole company, even at this price. So even if you take this and you move it over 1 decimal and go to 157, you divide everything by 10. Now you have, right here, divide this by 10, and you end up with 77 billion for the market cap. That means you could buy the company for 77 billion instead of 770 if the share price was 157. So you divide that by 10 and you end up with, in 20 years, you start with 11 on the balance sheet, and then in 10 years you add 50 billion, and in 20 years you add another 50 billion. You end up with 111 billion dollars on your balance sheet of stuff that you have, and that would work out okay at the 157 price if you divide everything by 10, because you started with 77 and now in 20 years you're well over 100. But right here you're starting with 770. It's going to take you 100 years to get your money back unless their income quadruples from this point, which it just quadrupled from the point before. It's just so unlikely. Warren Buffett just invested his money, $4 billion, into this company right here because it's a value investment. When you look at the balance sheet, he's already got $181 billion of his back. If the company closes, so the share price is $100 right now, $100. Warren Buffett just paid $100, probably a little higher, but I don't know. $100 per share, and it costs 334 to buy it. Divide that by 2 and you have this. So if the doors close tomorrow, he would get 50 cents on his dollar back in his pocket. If the doors close tomorrow for Amazon, out of this number, you're going to get like $15 per share. You divide that by 100, they only have 11. So if you divide this by 100, you end up with 7.7. So pretty close to $15, maybe $20 per share you would get back if Amazon closed the doors tomorrow. You would get $50 per share out of 100 if they close the doors tomorrow. Oh, and I should talk about the dividend as well, because JP Morgan has been offering a dividend for the past 5 years on this chart, and probably many years longer than that. Dividend, 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 dividend. Look at that. Beautiful. You get paid to be their investor. You don't get paid to be an investor of Amazon. You just get the pleasure of their stock price going up continuously, because everyone continues to buy it and it's getting inflated and more inflated. And the price has nothing to do with the financial statements. It's so far away from the intrinsic value, it's absolutely ridiculous. $2,000 per share. And I'm doing this number right now off of 1,500. I told you at 1,900 that is not worth that price. Whether the stock price goes up or down from here, I have no idea what the market's going to do. And Warren Buffett says the same thing. You just don't know when the market's going to offer you a deal or not. And right now it's offering you a deal in JP Morgan. And if it goes down to $90 per share, my guess is Warren Buffett will buy another $4 billion worth. That is my assessment between these two companies. I would say buy JP Morgan, and I would say do not, even at this price, even at $157, do not buy Amazon stock. Thank you.